Hello and welcome to Stocks Advisor channel. Here at our channel we are looking for interesting buy opportunities for US-based stocks. Today we'll talk about Boeing company traded at New York Stock Exchange, ticker name BA. Well, Boeing did during the day minus 1.38%, finishing at 224.42. After hours we see some slight volatility, which is actually negligible. In general it's quite stable, but overall what we see here for Boeing is general decline trend continues, correction continues. It might stop soon. There are some indications for that. That's why it's very interesting to observe it now and already start buying. But now we will talk what's happening and how to understand and how to trade here. So first of all, what we need to note that it's already a secondary, let's say, correction after the November. Because if you look at the November, you can see that here started actually a new upwards trend, and we went from the level of let's say sub 150 all the way to almost 240. So it was really incredible recovery from let's say the decline that was caused by COVID. So once we had release of restrictions and vaccinations, so traveling was expected to go better. Therefore we saw this very nice move. Then what happened, of course, it was very healthy linear channel correction, and then we have another move upwards that started by beginning of February of this year, and almost cloning the same correction style we saw in December, February. Now we are observing similar correction move, all the same. So if you look, even these temporarily, let's say, fake depth declines that we saw by mid of December here, similar one was seen the same in let's say second half of March. So in that sense, really nice move. Also, what is important and what is major indication for corrections is the fact that moving average 20, which is the green line here, and also the same was taking place in December, February, works as a resist level. So actually it becomes a top of the declining channel, and indeed this was the case, let's say December, February, and it is the case now. So if you look here, you can clearly see, let's say, the declining channel. Now we are in the middle of this channel, but what is most interesting here is that if you look at the moving average 20, it's declining. It works as a resist, also as an attractor, because when the price is much lower, it actually pulls back. It is pulled back to moving average 20. But what is very interesting, that moving average 50, the blue line, is now flattening, so it looks like starting to decline. And this would also mean that if the correction is going to stop here, similarly to what we saw in February, moving average 20 will be pushed up. And if you look here carefully, it starts also bending upwards. So seems like we start this fluctuation between moving averages is about to start, and this should cause the price to go higher. So we might have a next leg up forming, or a next trend upwards forming from these levels. And if this is indeed going to happen, so similarly to what we saw in February, March, so let's mark those green for our convenience. So if this is about to happen again, looks like it is, then it would be really nice moment to buy at these levels. And if not, if correction goes deeper, then of course we will look at the lower levels to buy. So if you look now here, how to trade, well, it's already advised to buy at the current levels. And speaking of those, actually these are definitely between actually the bottom of the channel and the current levels, which are also very nice volatility points that were formed in March and December. So therefore it's already nice to enter slowly through the current channel. So it's a call for immediate buy, and the channel is between 214.60 to 227.90. So this is the first level. This is the primary, let's say, technical pattern that can be seen here. So it's about to recover. Of other parameters that are also confirming this situation is actually MACD histogram. If you look at it, you can see it had many negative waves. Now looks like we had the series of 3 waves with decreasing amplitude, and now it's about to cross upwards. So any moment, by the way, you see as we speak, volatility after hours is now positive, it's in plus. So any moment it could go higher, and also RSI is lower than 50, so it's quite close to oversold area. It might bounce back any moment. So this is really nice moment to buy for Boeing. And actually this week most probably will be volatile still within the descending channel, and then next week we will go higher. So it's immediate call to buy. So let's write it here as a call out for us. The first level would be 214.60 to 227.90. Let's put it here. So this is the primary technical channel to buy, the primary expected behavior. And then actually you can buy here and take the profit. And speaking of profit taking, we need to keep here in mind that if it's a new leg forming, it could be really high. So it could go more than 20%. If we are speaking about more, let's say, faster way of trading, here it's advised still to take a reasonable profit. So I would say from 15 to 20% overall of money allocated in the position would be advised. And once you have it, really take it. Never be discouraged to take the profit. Take it all the time. Re-enter if needed. Check other opportunities, but never hesitate to take the profit, because what might happen, the position might expire, you wait too long, you try to become rich from one trade, and this is usually the recipe for disaster. So take your profit, re-enter, learn how to trade making multiple profits. This is the only way actually to be successful in stocks trading. So this is the profit target and the first channel. If this is cancelled, because this might be happening as well, if we go lower, if this technical pattern is cancelled, of course, then we need to be preparing ourselves to average down at lower levels. And the next principal channel to buy is this one. The reason for that is because it was a support line for previous correction to stop, and also it was the beginning of the the volatility level of the previous wave in November. So this is really a very strong channel again to buy. This is 174.84 and 191.43. So this is the secondary technical channel. If the primary one is cancelled, then we can start buying there. And how to buy with which volumes, we will talk about it at the end of this video. So this is the second channel or secondary technical pattern where we can buy. Again, re-entering there, and on rebounds we can expect to take overall profit again, as we said, 15 to 20% from the money allocated in the position. And the third level we always discuss is about risk mitigations due to possible negative catalyst kicking in. We never know what it could be, in which form it might come, but it's not even expected. But if it's coming, it's better to be prepared. And the way to be prepared for it is just to keep some funds to buy at the very principal levels that we've seen at least half a year ago. And if you look here, these are the levels actually between 130, let's say, and all the way to 143. So the 143.60. So the reason for this is just to keep some funds to mitigate possible, let's say, risks coming on negativity. So I will just write it here, a little bit decrease the scale and put it here for our convenience. So this would be actually the third level, the risk mitigation level, to keep some funds to buy through if the price declines. It's not that we say it's going there, it's not at all expected, but if it happens, if doomsday scenario takes place, while others will be exiting with losses, you will just be buying lower and again making your profit from 10 to 15 to 20%. So this way of trading, we never discuss stop loss, as you noticed. We always talk about averaging down. It's optimization for, let's say, not taking losses. And then idea is when you mitigate all risks and you optimize for not taking losses, what remains for you is to take a profit, or in the worst case scenario, exit with a draw. So this is the way of trading, very safe, daily based. You don't need to sit on your PC all the time. Just check it once in a day, let's say, and then you can trade, because we are talking and discussing on daily candles. Therefore, you are not required to watch the position all the time. You just know the levels to buy through and you can do it safely. So this is the way to trade with Boeing. overall, of course, the primary technical expectation is very positive here. Therefore, really nice to buy already, start buying. And speaking of how to buy through these levels and actually how to mitigate your risks, this is a non-linear averaging down. What does it mean? It means that the funds you would like to play here, you can split. And in this case, you can split them in 5 portions because it's very safe, classical way of trading. So you can buy in the first channel with 1 portion of the money you would like to play here. And then if the primary technical pattern is cancelled and we go to a secondary one, then you average down with 2 portions. So this way, your averaged price will be much closer to the second channel. And once rebound takes place, you will be actually making profit, easily overcoming the losses that you took from the first channel. And if there is negative catalyst kicking in, people will be exiting with numbers. You still buy with remaining 2 portions. And again, will recover completely and be able to make a profit from 15 to 20% from all money allocated in the position. So this is the way to trade, very safe. What you see now on the screen is so-called trading card. You can save it, print screen it, or print it out and use it as a guide to trade with Boeing for near future. So with this being said, good luck with this one. If you like this style of trading, the safe approach, non-linear averaging down, don't forget to subscribe to our channel for more videos and more discussions like this. Press the bell button. This way you will not miss our new videos and new interesting discussions for US buy stocks.